Hello and welcome to the Delaware Mortgage Rates Weekly Mortgage Market Update for the week of January 7th, 2013. Hello, I'm John Thomas from Primary Residential Mortgage here to give you your update. Well, Happy New Year. What we saw last week is the new year was not kind to mortgage rates. Last Thursday, January 3rd, mortgage rates fell, the mortgage bonds fell off a cliff, which caused mortgage rates to jump higher to end the week. What happened was on Thursday, the Federal Reserve released their meeting minutes, and some surprising things came out. It looks like the Fed is not real happy about the mortgage buying program QE3 and QE4, and they do want to try and end that by mid-year versus continuing to at least 2014. So that was bad news for bond investors, so they started selling off, which caused mortgage rates to go higher. Friday, it gapped down even lower, pushing rates a little bit higher on Friday, but at the end of the day, it was able to claw its way back up to where it ended on Thursday, which is actually a bullish sign. So we are recommending floating your Delaware mortgage rate Monday morning to see if the market can continue its recovery and stop this downward trend of the bond, which is an upward trend to the mortgage rate. Because we did lose a lot. We are off all-time record lows now. And if you got our information last week, we were recommending locking ahead of a fiscal cliff deal. And that is kind of what started the move for the rates higher, and then they really jumped higher after the federal minutes. Now, if you look at the bond chart on the screen, you can see that big gap down on Thursday, the big red candle down, and then the green candle at the bottom is where it opened on Friday. You can see the recovery, so that is a bullish signal. So if we can open Monday and continue that climb back, that would be good news for mortgage rates, and that's why we recommend floating to open to see where we're at. The other news is the deal was reached on the fiscal cliff. It was not anything that solved any problems. All they did was they did keep tax rates low. They extended the Bush-era tax cuts for anyone making less than $450,000. If your household income is over $450,000, you will have significantly higher taxes from a couple different programs we mentioned in last week. But Congress did not address the debt ceiling, which was the whole purpose of the fiscal cliff, to get our spending under control. We actually hit the current debt ceiling, which is $16.394 trillion. Sorry, $16.394 trillion. We hit that December 31st. So now we have until about the end of February for Congress to pass, basically raise that debt ceiling so we can keep borrowing to keep funding our government. If they don't increase the debt ceiling, the government will begin to shut down, federal workers will not get paid, all kinds of crazy stuff. So they will raise it, but there's going to be a lot of fighting between now and the end of February, and they probably will wait till the last minute, which is about February 28th. In the fiscal cliff deal, there was a good piece of the legislation. In that 154 pages of pork, there was some good stuff. They did extend the Mortgage Forgiveness Debt Relief Act. That was important. Basically, if you do a short sale or get foreclosed on, before they passed this Relief Act, you actually had to pay income tax on the difference between what you owed the bank and what you actually sold the house for, what they accepted a payoff. For example, if you owed the bank $200,000 and you negotiated a short sale for $150,000, that was $50,000 of that mortgage loan you were obligated for. They forgave. You don't have to pay it back. So that's considered income under the current tax code. So if you make $30,000 a year and they forgave $50,000, well, guess what? That's another $50,000 in income. You didn't really get the money, but you owe the tax on that $50,000. So if they wouldn't have passed that, Relief Act expired at the end of last year, December 31st, 2012. So they've extended to December 31st, 2013. So anyone doing a short sale foreclosure this year is not going to be paying tax on the difference. The other thing we saw was December 2012 jobs report was released, which showed 150,000 jobs were created, and unemployment for December remained the same at 7.8%, which is still high, but it's definitely down from last January 2012, where it was 8.3%. Now, a better read on the job market is the labor force participation rate, which remained the same at 63.6%, which is a 31-year low. That is the real measure of unemployment, because that counts everyone 16 years and older is eligible to work, and that shows, we just don't have the people working. So that was not good news, not a very good read on recovery. But there was some good news on foreclosures. CoreLogic reported that foreclosure inventory fell 18% in 2012. Now, there's still at least 13.5 million homeowners across the country underwater on a mortgage, which means they owe more than their home is worth. So the foreclosure option is not being the option of first choice now. There's going to be more short sales more loan modifications, so it's a good thing the Debt Relief Act was passed. So all these short sales will be coming through the pipeline the next year, 2, 3 years, to clean out this inventory. They're not going to have to pay the tax on that. So in the local news, we have the next free first-time homebuyer seminar is Tuesday, January 15th. Now that's in Dover, at the Dover Sheraton Hotel from 6:30 p.m. to 8:30 p.m. And then the next one in Newark is January 19th, and that's a Saturday, and that is from 10 a.m. to noon, or actually the second session you can register for as well, which is 1 p.m. to 3 p.m. So 2 to choose from. That's at the Christiana Hilton Hotel in Newark, Delaware. You can register for the Dover or the Newark seminar by giving us a call in the office, 302-703-0727, or you can apply online or register online for it, DelawareHomebuyerSeminar.com, www.DelawareHomebuyerSeminar.com. Now, we are recommending you get your refinance in. The rates are looking like they're going to gradually move higher throughout the year as we get closer to the Fed's going to end their buying program. So we recommend, if you've been considering refinancing, now's the time. Call us or apply online. Get in there, get your application. We'll tell you what you can do. There's lots of programs, streamlined programs, the HEART program. We'll take care of you. If you're looking to buy, 2013 is the year to buy. They're talking about 2013 is going to be a year where we have appreciation in the real estate market. When the final numbers come in, it looks like we might have actually had the first year of appreciation in 2012 nationally at about maybe 4%. And they're projecting between 4 and 7% in 2013. So now's the time to buy. Take advantage of these record low rates and take advantage of, if you buy now in the beginning of the year, you will actually see an appreciation on your investment at the end of the year in 2013, according to predictions. So if you want to do that, we'll give you a free pre-approval consultation. Give us a call, 302-703, or apply online, www.puremidelaware.com. Look forward to seeing you next week.